It's a very good question, and one of the issues is that geopolitical tensions and outcomes are so extremely difficult for markets to deal with because we're afraid of something that might happen, and maybe it will happen, maybe it won't happen, or maybe it'll happen more like this or more like that. So really, there's not much we can do with these geopolitical situations in terms of actually over anticipating them. We just simply have to react when they come about. But the first instinct from my side is to say, keep calm and carry on if you have a general worldwide exposure. Of course, if you have specific exposures to the region, you need to be more careful there. And you need to be aware of the impact if this does have some sort of dramatic impact on the oil markets. That's the one place where it gets quite global in terms of the immediate impact if we're seeing some dramatic spike in oil prices. So for global markets outside of the region, certainly that is the sort of the crux or the key component here to watch. And that can bring higher prices and lower growth if we have a much more significant rally in oil prices. But it really is a case of very hard to anticipate what this may or may not mean, and to sort of be aware of it, be ready to react if it does happen, but not to over anticipate. Yeah, so interestingly, on that Fed rate cut, previously it was expected because the Fed had started this rate cut cycle with its first rate cut back in September of 50 basis points or 0.5%, that it would wanted to continue to cut by this rate. But we know that the Fed is most concerned about the labor market and doing its rate easing. And then we've had some somewhat more firm labor market or employment data. So now the expectation is that the Fed will only move by 0.25% or 25 basis points. So really, it just shows the Fed is simply reacting to economic conditions. And you have to ask ourselves, are we in some kind of landing scenario, so-called, where we're heading towards some kind of slowdown in growth, a so-called soft landing if that slowdown does not result in a recession? Are we headed for a recession scenario eventually? That's a much more difficult scenario to deal with, and the Fed would be cutting rates faster. Or are we dealing with a so-called no landing scenario where really the economy is just going to continue to do okay? Right now, given more firm data, we could be looking at, and depending on the US election outcome, we could be looking at a no landing scenario in the near term, meaning that the economy is not materially deteriorating. And this could ironically be not such great news for the markets because the markets are sort of looking for the Fed to continue to cut all well into next year and for rates to be much lower. But if there is no landing, then inflation could creep back higher and the Fed may not cut so much. So it really is at a key sort of decision point here or sort of timing point here, pivot point on where this economy is headed, and the Fed will react accordingly. Yeah, I think generally speaking, gold is at the start of a very long uptrend. The main question will be during that very long uptrend is how much more can gold rise in real terms? In other words, above and beyond the rate of inflation. And the answer may be quite modestly, but on the safe haven commentary, I think increasingly gold will be seen in coming quarters and years as a safe haven, as much as anything, a safe haven against inflation itself. So while gold is, I think, actually quite expensive now in real terms, relative to where inflation has been over the last year, I think the market correctly sees a structural inflationary component around the world and is positioning itself for that. So, the short term, I think gold could easily correct. It could go down to several percent, but I think it's always going to maintain, of course, it's always going to maintain some real value, but I think it is at the beginning of a very long uptrend that could last years, because I think we are in a new inflationary regime, despite the fact that inflation has come down as much as it has since the pandemic. So very difficult short term, but I think to make any kind of call on gold, it's had a very aggressive move. It's kind of slowed down here, but I think the long term situation for gold is quite towards the upside.